So how is credit calculated? Dad, you talked about earlier on the FICO score, and this is the model that they use. This is the weighted scale that they're looking at.
Right. You'll see that payment history is big, 35%. You'll see that the amount owed is pretty big. And really, those are the areas we're going to concentrate when we're trying to help you get a better interest rate. Do you want to go into more detail on that?
Yeah, let's start with payment history. So payment history is really looking at, do you have late payments in the past? How have you done in the past? A 30-day late payment can potentially lower your score 100 points. That sounds really harsh. And that's the potential. We're not saying it always will be there.
It's a big hit. It can be a big hit.
Yeah. So Dad, do you mind kind of going down into breaking down a little bit more about late payments?
So a lot of people think that, oh, I made a late payment on my credit card. I only owed $30 on it. I didn't have that money, so I was paying something else. But I'll catch it up next month and then we'll be fine. I'll be caught up. Don't worry about it. I won't have any more late payments. Well, that late payment is in your history. And it stays on your credit report for 7 years. So you don't want to make a late payment because the late payment shows that you weren't willing to make a $30 payment. And it doesn't matter whether it's $30 or $500 or whatever it is. If you miss a payment on an obligation, it will show as a 30-day late.
Yeah.
And that's not good.
Yeah. And then kind of help us understand a little bit more about when is it considered late?
Okay. So the 30-day late is not. So let's say your payment is due on the end of the month and you didn't make it until the 5th. You forgot, you got the notice. Maybe it's even the 15th of the month. You got a notice and it says, hey, there's a late fee. Go ahead and pay the late fee, pay the payment. You're not 30 days late yet. So it won't show. But as soon as you're 30 days past your payment due date, then it will show as a 30-day late.
Yeah. So, and again, it doesn't matter what the amount is. It's going to show up on your credit history indefinitely.
Right.
Well, for years to come. So that's payment history. You got to stay current on your payments. That's the bottom line that lenders are looking for. See if you're trustworthy on your ability to pay back. Let's talk about amounts owed. Really, the key phrase to understand here is the term credit utilization. How close to your credit limit are you? The goal is to be under 30%. If you want to have a credit score in the 700s, you want to be under 30%. Some people say under 20%.
The lower you are, the better your FICO score.
Yeah. So let's do an example. Let's say I have one, or it's over my dad's head. So let's say my dad has one credit card and he spends $1,000 with that credit card. Jumping down below, where is it? He spends $1,000, but he has a limit of $2,000 and he uses that $1,000 for good charitable things. Like whenever he goes out to eat for lunch at Taco Bell or Panda Express, he always rounds up to, donate to the local charity. He brings lunch to a stranger. The issue is the utilization. Using $1,000 and having a $2,000 limit, the utilization's at 50%. It's showing the lender that you really rely on that card to get around in life. But let's change the example a little bit. Let's say we have two credit cards. One person has two credit cards. So my dad has two credit cards, and he uses $1,500 on the second credit card, and it has a credit limit of $10,000. And he instead with this card does things that are, you might consider irresponsible or immature. He buys junk food, video games, infomercial items, and a replica lightsaber. Well, his utilization would be 15%, and his FICO would actually be positively impacted by that kind of credit card. So the good news is your cards are combined. All your limits and all your cards are combined. So combining these two cards, the total spent was $2,500. The limit is $12,000. So you can see right here that the utilization is 20.8%. and the FICO would have been positively impacted. Another example of amounts owed. Let's say we have someone who's just graduated college. Let's say we have Kate. She gets a new credit card with a $10,000 limit, and her first job is going to pay her $100,000 a year. She's making great money. And the stars they're aligning for Kate. Her dream home comes on the market. So she's got good income. She's got a high balance, and her dream home's on the market. She comes to us, and one of the first things we ask is, what's your credit score like? We do a review of it, and she's pulling up a 605. 605 it's okay. It's not, we really want to see, lenders want to see things in the 700s. We could get Kate a loan, but it's not as good as if it was higher. So let's say she has a $10,000 limit, but she is spending $8,000 a month on that card for the last 2-3 months. She hasn't had this card for a long time, so the history is low and the utilization is really, really high. We can get Kate a loan, but it's going to cost her thousands more. It's going to be like that Bill and Ben situation where it's costing her a lot more monthly and over the life of the loan. And I guess the moral of the story is credit scores don't care about your income.
They don't. This reminds me of a story of a gal that came to me, and she was worked as a teller at the credit union, and she got her first credit card and she maxed it out. And then she came to me about 2 or 3 months later and said, okay, I'm ready to get a loan. And I pulled up her credit and it showed her card maxed out. She says, well, I wanted to prove that I can make that maximum payment each month. I said, no. You need to use it as if you don't need the card. And then they give you a much higher score.
Yeah. So people will come to us and they'll ask, well, what can we do to improve the score? And there's a couple of things that Kate can do. Dad, do you mind kind of going a little more in detail on this? You said it earlier, you use it like you don't need it.
Use it like you don't need it. So especially when you first get your card, if you don't have a credit card and you first start to get one, don't max it out. Just use just a small amount. Buy gas, buy a candy bar, whatever. Wait a month, pay it off. Do the same thing 2 or 3 months in a row. Use it like you don't need it. Just use it and show that you're responsible in paying it back. Keep your utility rate low, and immediately you'll see a very high FICO score.
Yeah. And in this example with Kate, remember, she's making $10,000 a month. So she could have easily just been spending that stuff in cash instead of using her credit card. But because she used her credit card, because her utilization was too high on her credit card, it harmed her. If you get a credit card and you don't use it, the score is going to go down.
Well,
you use it a little bit.
It needs to be active. And so it needs to be used about once every 3 months. But to start off with, you probably want to use it once a month or once every other month. And then it shows the FICO score model that you can, you
start to build a history of making your payments.
Yeah, use a history that you're going to be a good borrower.
Yeah. So the first thing Kate can do is spend more in cash, bring the utilization down. The second thing she can do that a lot of people aren't aware of is she can call her credit card company and ask them to raise her limit from $10,000 a month to $20,000 a month. Credit card companies, they'll do this for you automatically, but there's no harm in asking. The worst that they can say is they can deny you and say, hey, we're not quite ready. I don't know if I've had that happen to me, but
it used to be automatic that every year you'd get an increase in your amount on your credit card. It's not quite that way now. It is a little bit, but you can call, and a lot of times they'll just automatically do it. It's worth a phone call if you want to try it.
Yeah. So if for some reason you have to use your credit card, let's say she for some reason has to keep her credit card, she can only, let's say, spend $5,000 a month in credit card and $3,000 in cash. If she bumped her limit to $20,000, it would help the utilization there. So the big thing that we got to say is if you increase your limits, don't increase your spending with it. It's not going to help your utilization. We're not trying to give you a license to go spend more on your credit card.
Right.